Alright, let's dive into what's happening in the markets right now, because it's a wild ride and there's a ton to unpack. Here's the thing, the S&P 500 just hit a fresh record high, and while futures are barely moving tonight, the story behind this rally is way more fascinating than it seems. First off, what's driving this? Personally, I think it's not just about earnings, though those have been solid. Caterpillar, for example, had a blowout quarter thanks to the AI build-out. But here's the kicker, the real catalyst might be geopolitical. Treasury Secretary Scott Bessent hinted at a potential US-Iran deal to reopen the Strait of Hormuz. If you take a step back and think about it, this isn't just about oil prices, it's about easing global tensions, which markets love. What many people don't realize is that geopolitical stability can be a silent booster for equities, and this could be one of those moments. Now, let's talk about the tech sector, because it's where things get really interesting. SoftBank jumped 10%, and Asian tech stocks are surging in response to Wall Street's AI rally. But here's the twist, this isn't just a US story. Samsung Electromechanics and LG Innotek are skyrocketing on reports of Tesla camera module deals. What this really suggests is that the AI boom is becoming a global phenomenon, and companies tied to this ecosystem are reaping the rewards. In my opinion, this is just the beginning. AI isn't a fad, it's a structural shift, and the market is starting to price that in. But here's where it gets nuanced. SpaceX, despite beating revenue expectations, tanked 7% after hours. Why? Capital expenditures. Elon Musk's company is spending like there's no tomorrow, $18.4 billion in Q2 alone. This raises a deeper question. Are investors rewarding growth at any cost, or are they starting to demand profitability? Personally, I think the market is becoming more discerning. Growth is great, but not if it's unsustainable. SpaceX's dip could be a sign that investors are rethinking their appetite for endless spending. Another detail I find fascinating is the contrast between AMD and Palantir. AMD dropped 8% despite slightly beating earnings, while Palantir popped 30% on what its CEO called otherworldly results. What makes this really interesting is the divergence in investor sentiment. AMD's drop suggests that beating expectations isn't enough if the market thinks you're peaking. Palantir, on the other hand, is being rewarded for its narrative, AI, government contracts, and a sense of momentum. From my perspective, this highlights how much storytelling still matters in the market. Looking ahead, there's a lot on the horizon. Disney, Uber, and Eli Lilly are reporting earnings soon, and ADP's payrolls report is coming out. One thing that immediately stands out is how much the market is hinging on these numbers. If you take a step back, it feels like we are at a crossroads. Are we in a bubble, or is this the start of a new era? Alicia Levine from BNY Wealth says earnings aren't in a bubble, but I'm not so sure. Valuations are stretched, and the market's reaction to any disappointment could be brutal. Here's my closing thought, the market's rally feels both exciting and precarious. On one hand, we've got AI, geopolitical optimism, and solid earnings. On the other, there's overheating, valuation concerns, and the ever-present risk of a misstep. What this really suggests is that we are in a market that's both opportunistic and unforgiving. So, as we watch these record highs, let's not forget to ask, are we building on solid ground, or are we just piling risk on top of risk? Let me know what you think in the comments, I'm curious to hear your take.